Hello guys, what is up? My name is David, and today we're going to be taking a look into whether or not Uber stock, ticker symbol UBER, is a buy right now. Currently, Uber is trading at around $35 per share and is actually up year to date given everything that's happened in the markets and our economy. Uber is considered to be a long-term growth play by many investors. And for those of you who don't know what Uber is or what it does, to put it simply, the company's mission is to create convenient transportation options for everyone, everywhere. And in this video, I'll be looking into Uber's business model, competitive advantages, valuation, as well as management to see if the stock is undervalued or not. Let's start off with Uber's business model as well as their competitive advantages. Uber's revenue consists of two main segments: the ride-sharing business, which has grown to be profitable last year, and Uber Eats, which is their less profitable delivery app. These two segments still have a lot of potential in the future to grow. However, currently rideshare demand has virtually fallen off a cliff since the outbreak of Rona. Of course, this is a short-term issue, but it does bring to light a very important threat to their business going forward, as well as their future growth catalysts. Many businesses have started to eliminate the need for offices and transportation in general due to the increasing amount of automation found in the workplace. Therefore, it is unlikely demand will come back up to those 2019 levels anytime soon, and Uber's profits will suffer as a result. Thankfully, this is where Uber's competitive advantage of diversification of revenue comes into play. See, one of the reasons I had originally invested into Uber was because of Uber Eats and Uber Freight. The market had completely ignored future growth catalysts for these businesses, as well as the potential for these businesses to be sold off in order for Uber to continue growing their ride-sharing business. For example, Uber Eats had likely mitigated some of the revenue loss for the company in the past quarter, and Uber's main rival, Lyft, has no other revenue sources, and future growth will be hurt badly as it is likely the company will need to take out debt due to their relatively small cash position and squeezed revenue. Another huge advantage that Uber possesses is the fact that their ride-sharing business is profitable currently. Although these profits have been mitigated by other investments, it is still quite an impressive feat and proves that management is quite skilled at pushing forward that long-term growth agenda, which can be sustainable. That being said, no one could have expected an over 80% drop in demand for ride-sharing, and going forward, if we were to enter a recession, Uber's future growth could still be jeopardized. On top of this, their current valuation carries quite the bullish sentiment with little downside priced in, if any at all. No one seems to be factoring in the potential for reduced margins, automated taxi cab services, or the potential for demand to be reduced permanently. Next, let's talk about management, because I really do like everything Uber's CEO Dara has done for the company. I think he's an incredibly smart man that will likely continue doing a great job leading Uber into the future. However, this is part of my concern. See, Dara himself has brought up on several occasions that management relies on him way too much to make final decisions on things as well as guiding the company. Uber's team has done a better job becoming independent. However, I still think there's a very strong reliance on Dara going forward, and I don't think Uber's business model can be overrun by one person. Lastly, let's look into their financials. In terms of their income statement, Uber's total revenue has been consistently increasing by over 30% each year, although operating income has been on the downtrend, which is not a great sign. Then again, if we look further, this is mainly due to the increase in R&D spending. In terms of Uber's balance sheet, Uber has over $9 billion in cash, which is around 1.5 times their current liabilities. They also have 1.5 times total assets than total liabilities, which is yet another positive sign. Overall, I think that the market recognizes Uber's potential and has already priced in most of the future upside for the company in the next 5 years or so. I don't think much has changed fundamentally, but as value investors, we always need to reassess if the current price is really still undervalued or overvalued, or if there are better places to put our money going forward. And even with the markets currently the way they are, there are many good buying opportunities still in the market. A stock such as Air Canada has a lot more potential upside, even though I'd compare its risk going forward to be something similar to Uber. If you haven't checked out my Air Canada stock analysis, I highly recommend checking that one out as well. I've linked it in the description below. So, while I think Uber's financials as well as their management are solid, and there still is a lot of potential for the company going forward, the risks that have emerged are far too large for me to comfortably buy in at the current price, and I think the stock is rather overvalued. I'd like to see the price fall down to the 20s again in order for me to be a buyer of this company yet again. If you guys enjoyed, please be sure to support the channel by smashing that like button and subscribing, and also let me know in the comments down below what your thoughts are on Uber, and I'll be sure to respond to each and every one of you. With that being said, have a wonderful day as always.